Now, this is actually a re-uploaded video, so a couple of you may have seen this before, but it didn't do too well, so I thought I'd bring it to you again. In the video, I actually say we're at 3,000 subscribers, and we are now pushing on for 9K subscribers. So thank you, everyone, for all of the support that you've been showing on the channel. This video, like I said, is a moving average strategy video, and it really will repel your trading, and this strategy will really help you learn and develop your skills. Unfortunately, you can't squeeze all the details you need into one video, and that is why this is sort of an announcement to also let everyone know that I do offer one-to-ones where we teach this strategy, but we go into so much more detail. If you guys are serious about your trading and you want to become profitable, get in contact with me via my email address. It is findingforex@gmail.com. You guys can contact me and we can get you in for a one-to-one session. So welcome back everyone to Finding Forex. In today's video, I'm going to be giving you guys the perfect moving average strategy. But before we get into all of that nitty-gritty, first of all, there are a couple of things that I just want to mention. First of all, the Christmas tree. I'm telling you now, that is going very, very soon. And second of all, thank you all for 3,080 subscribers. I don't know if you can actually see that sign there, but I've got 3,080 subscribers. The subscriber growth has been absolutely phenomenal. If you guys want to be taught how to trade absolutely for free, this is definitely the place for you. But within this strategy, it's going to be great if you're a beginner. It's going to be really beneficial because this can help you know when to get into trades, know when to get out of trades, know where to put your stop loss, know where to put your take profit, and best of all, it helps you trade with the trend. There are so many pros to this strategy specifically as a brand new trader. So trust me, if you are new, sit back, relax, leave the video a like because it does help me out and it does help the channel out. And let's get into the strategy video. So first of all, I would like to give a shout out to the moving average because the moving average is just such a simplistic object and indicator, and yet it's so effective. A couple of the bonuses about using a moving average, if you guys didn't know, is it can be used as a dynamic support and resistance. It can be helped with stop losses, take profits. It's such a useful tool, and as a beginner, because of how simplistic it is definitely one of the main ones you want to use when starting out with your trading because it's so simple, it's so easy to get to grips with. And in this video, that is going to be the highlight part of the video. The highlight of this strategy is the moving average. So first of all, what we're going to want to do is we're going to want to add some indicators. So to do that, what we're going to is the top over here, we go to indicators, and then we're just going to search in moving average. So you can do all of these. These are technicals. These are actually things that people have put on there. But we're going to want to scroll down just to moving average right here. So we're going to have two moving averages, okay? So we're going to press it twice. We're going to have two moving averages. We're going to have one moving average. If we go to the top left-hand corner of the screen, we're going to change that. We're going to keep one as the 9-period moving average. And we're going to change one. And we're going to change this to the 21-period moving average. Now, this is such a great strategy just for the simple fact it can help you identify trends. You know when to get in, you know when to get out. And because of how the moving average acts, we want to be acting in the short term because we want to know the long-term bias. So if we take this price action here, that is trending upwards. All of this is just upwards momentum. So we know we'd be looking for buys here, and the moving average confirms that with that little crossover right there. And that is how this strategy works. We're using it to confirm our bias. We're using it knowing when to get in, knowing when to get out, and all of that good stuff. If we just look as well, in this bit of price action here, the moving average, the 21-period moving average, actually was a dynamic support and resistance. So in this case, it was a support zone. So once it crossed over, it started to be used as support, resistance, sorry. And then in this section here, it started to be used as some resistance. And this is why it's such a good tool, because if it breaks the moving average, you could also close your position if you wanted to. So what you could do is when you saw a moving average crossover, so you could hold, in theory, this trade here. If we got in right here, for example, we'll go down to here, short position. If we got in here, we had our stop losses just above these highs. What we could do is run until the moving average crossed over again. So the moving average didn't cross over till here. So what we could do is drag our take profit down here. Once we got the crossover, we would then take our profits. And we got a 1 to 3 risk to reward just from using this crossover. Now, before I go into any detail and before I show you guys how to have an even more accurate system, first of all, I just want to promote my Telegram signals group, which has been absolutely killing it as of recently. If we go up to here, I send signals, I send analysis, I send everything. So what we did is we had a beautiful GBP SGD trade, which is the Singapore dollar versus the British pound. We had a breakout of this structure here. I got in, stops just above, targeted, to be fair, all the way down here, but we found this really nice support zone, which we actually ended up breaking through. But we got out at about a 1 to 1.5, which means we still got our profits, we still took risk off the table, and that was just one of the trades taken on that day. The other trade was a NZD JPY trade, and this one was so beautiful. Don't worry too much about the analysis because it's quite complicated. Essentially, what we did is we used our Fibonacci from this swing high to this swing low because we're in a downtrend, and just looking at basic market structure alone, lower high, lower low, we came back to retest and we rejected this with a beautiful pin bar straight off the 50 period moving average, straight off the 50% Fibonacci retracement. What we did then is we got in here after this candlestick, we put our stop losses above the 78.6 fib zone, above our trend line, and we put it just above the moving average. And what happened? Price collapsed. Absolutely collapsed all the way down to this zone for a 1 to 2 risk to reward. It did, I think, break this zone in the very, very late evening, but it was doing something along here. It was pinning away, so I thought, I'm just going to close it and take my profit, and it was a beautiful trade. There was also a Euro USD trade, which I want to quickly jump over now. I actually told people to close it, and there was a very good reason. So what we're going to do, sold Euro USD, stop loss, take profit, closed out GS, that was the trade earlier on, closed out EU at a small loss, and I just want to sort of let you guys know why I did this. So Euro USD, what we have here is, first of all, just using the moving average crossovers. We haven't actually crossed over yet at all. And what we have here, just looking at basic market structure, we've pushed high, right? We've pushed lower again. So we've got a lower high here and we've got a lower low here. And this is where I entered. And I'm actually holding the trade personally, but I told people in my Telegram to close at a small loss for the simple fact that sometimes in the markets you get gaps and all of that good stuff, and I didn't want them risking their capital on a gap. So the market could close here on a weekend, but open up here on a Monday morning, and that's, or a Sunday evening, I should say, and that's something that I didn't want other people to risk. I didn't want to risk other people's money just because my analysis said I shouldn't do that. So I told them to close it out. I personally held, so I take the risk. All of them closed at a small loss, and that was that. But once again, looking at this, even if we're just looking at Euro USD, what a beautiful, beautiful trade this could have been. We pushed up, we pushed down, we had the moving average crossover, and then look what happened. We collapsed. And what we could have done here is we could have got here a short position on Euro USD. We could have held here. You could have put your stop losses above here. I think personally that's where I would want my stop loss, but you could also put it maybe down here, which is slightly more conservative, just above these highs here. I personally would have preferred to do that. I think a 71 pip stop loss is ridiculous, and if you had it up here above these highs, you would need to target all the way down here beyond these previous lows just to get a 1 to 2. So you could have got a stop loss just above this moving average. I'd say that's a real safe place. 42 pips, not too bad. We've got a crossover. And then what we do is we hold until we see price action either think that it's going to change its direction or we get a moving average crossover. So we could hold here. At the moment, if we did take this trade, we would be in a 1 to 7 risk to reward, which is not bad. But looking at price action, everything still is going in our favor. We have a lower high here, a lower low here, a lower high here, and by the looks of things, we are pinning away from this zone quite nicely. So we've got a lower high, we've pinned away from this zone, and I'm pretty sure that I also used a Fibonacci retracement, only from this high here to this low here. So we've got a 78.6 fib rejection zone. We've got a doji just on this support. We've followed by another bearish doji, and we still don't have a moving average crossover. So what we're going to do, we're going to hold this trade. And when we get down to here, we might close it, we might not. We don't want to get too greedy, but we also want to be aware that when the trade is going against us, we need to close it. But until this moving average crosses over the other way, I will be holding Euro USD. Now, how do we get a higher probability trade? So obviously, trading with the moving average crossover is great, but how do we ensure that we trade with a crossover while also trying to get the best risk to reward, while also trying to make the trade as high a probability as possible? And for that, it's really, really simple. So I'm just going to drop down to the 2 hour on Euro USD JPY here. And as we can see, right in this zone here, we have a nice area of consolidation. Obviously, this is something normal in the markets. You could even just box that whole section off right there. Right, so that's got an area of resistance. As you see, we come up, broke above, broke below. But the moving average has never crossed over until here. Now, unfortunately, we didn't want to get in here. This would have not been a very good trade whatsoever, because although the moving average has crossed over and we could have placed an aggressive buy here below these lows, that would have been a very silly move to do because there's no other confluences. We're at point of resistance and the moving averages are telling us to buy. We wouldn't want to do that just yet. Instead, we would want to enter after this huge engulfing candle right here. We've pushed hard out of our support and resistance consolidation area, and as you can see, the wicks on this candle are tiny, which is a complete momentum move. So what we'd do now is we'd draw this on here, and then what we would do is we would simply wait for price to be at a premium price so we can buy it. So we got the rejection down here, and then on this moving average, once again, a dynamic support and resistance is what a moving average can be. We got a nice bullish engulfing. So what we could have done is we could have got a long position off this area here, and we could have had it just below these moving averages, which is a 30 pip stop loss. And then what do we do? When the moving average crosses back over, we will shut our position. So it got to here and crossed over. And what's that? A 1 to 2 risk to reward, and that was even the moving average crossing over. And look at that, 1 to 2 out of the trade. Yes, it did push higher. We still caught over 70 pips and a 1 to 2 risk to reward. So if you were risking 1%, you've still caught 2%. You've still caught 70 pips, and you've basically had minimal drawdown. You got in here, price shot up straight into profit, tested the moving average again. It didn't break there. It didn't cross over, and price carried over. And then when it crossed over again properly and held the cross, what did we do? We shut the trade and got a risk to reward ratio that was a 1 to 2. And that's what trading is. Just making sure you're maximizing your winners and minimizing your losers. If you guys want to join this free Forex Signals Telegram, there'll be a link to that down in the description. Currently at 334 subscribers, and I think I made this Christmas Eve, so we've been absolutely killing it on that front. Not even been open a month yet for this Signals group, and we're already almost at 340 subscribers. Thank you all for that. If you did enjoy this video, give it a like because it does help me out and it does help the channel out. Subscribe and let me know your thoughts and theories down in the comment section below. I want to hear video ideas. I want to hear what you think, if this helped, if it didn't. Let me know all of that down in the comment section below. But this is Luke, and I'm signing out. Peace.